Hey traders, it's Greg. What's happening here midday? I was just talking in the green room there a few minutes ago and figured I would share the same with all of you. So we had a decent bounce here. And what we were talking about was that the probability is that the easy lifting, so to speak, is over. What does that mean? That it trends in a relatively easy way. And as you can see on the 5 minute chart, higher highs and higher lows, and momentum is slowing down. The distance between these pivot highs is slowing down, and see it's starting to roll over here a little bit. On the 65-minute chart, you see the bottom of that little congestion area there, which is filling an initial gap, the bottom of the gap. Another thing that we talked about was that, well, we often talk about gap fills, which would be the actual prior that bar's close. It doesn't always get there, and that's why we look at the bottom or the pivot that is preceding the actual close. And it's close enough for government work, right? So if you were trading this on the way up, it's coming into what's going to be a stiffer resistance area. And so step aside, wait and see what happens. Now, if it can deal with this congestion area in a constructive way, what does that mean? Well, it doesn't collapse all the way back down to yesterday's low, or even to say it doesn't come all the way back down, not yesterday's low, today's low or today's open, coming all the way back down there, the retracement wouldn't be that deep, and that would be constructive. If it could go sideways in this area and chop around tomorrow, well, that would also be constructive. Well, let's see what happens. Now, tomorrow isn't a big day for news. There's a bond auction at 1 o'clock in the afternoon, but the bigger day is going to be on Thursday when the initial jobless claims are reported at 8:30. In other words, we don't have any heavy economic news until Thursday, even though the bond auction could be a factor where it maybe really wouldn't be too much on the normal conditions, but because there's such a focus on the Fed and interest rates, it may be more of a play, but that's going to be until 1 o'clock. The point is that before 1 o'clock tomorrow, the markets kind of have a somewhat lower risk position just based on news. So we'll see how it deals with this. So let's look at the S&P 500. Similarly, you see it's coming up to the same area. It's almost there, give or take. You can see the cursor on the 5 minute chart moving around. But 5,300 being a whole number, and there's a large volume there, call volume. A lot of calls being bought at 5,300. Many times that acts like a magnet. And once it gets there, it's going to run into some headwinds. Could get a little bit through it, give or take. It often does, just to overshoot a little bit. Maybe you get a breakout bar failure, it comes back in. So be aware of that. Now, the close up there is quite a distance away. You can see, it's on the 65-minute chart, the top of that congestion area. Sometimes it makes it there to close the gap, but just conservatively, the bottom of that bar will begin to be where the sellers begin to come in. So keep that in mind, going into tomorrow. I was looking at a few other markets. SMHs are doing pretty good. Now, when we compare relative strength and weakness, and I did a chart of the week on that over the weekend, you should take a look at it if you haven't. But this is showing relative strength. Well, it was showing relative weakness before, and a lot of times those that showed relative weakness begin to show relative strength. You might say, well, why is that, Greg? Because if they were weaker, why would all of a sudden they become stronger? It's the void concept. Because they have collapsed so far, they're so far away from any significant resistance, buyers begin to come in and take advantage of the bounce or potential bounce. So this congestion area, which we saw in the other two charts, this is what is called constructive price action, which you see how it just chops sideways there, and then it continued to move higher. So that now coming up to the top of that, it's filled the gap. It's got another little void below that gap fill. Now, if this can continue to show some strength tomorrow, that would be where we would target this to move up toward the bottom of those bars. On the Russell, this was another one that got collapsed and is coming up into a resistance area. Same idea, same concept applies to everything. We could be looking at stocks, but these indices here have somewhat similar patterns. We'll keep that in mind. Uber was in the news, so that reported earnings. It's been collapsed. It was an institutional favorite back here, and they will often come back for these. They gave back an awful lot to pull back here. So let's see how that acts in that area of resistance. And just take a look at the transports here. They came down to the bottom of the range. They collapsed. Let's see what they do. They're coming up into the same area of this congestion there. So we see similar patterns, support or resistance across these various markets. And let's see how far they go. They're not going to go back up to the top of the ranges. That would be virtually impossible historically. So somewhere in here, we suspect that sellers are going to come in a bit more aggressively, and maybe it happens on the Thursday jobless claims. As always, if you have questions, email us, Greg and Dan at Master Trader.